I'm Max Keiser. This is the Keiser Report, day 17 of the big lockdown. And of course, as the saying goes, when the going gets tough, the tough make keto cheesecake. As you can see here, I've put together a delicious coconut keto cheesecake in my Instapot. And this is what's getting me through this horrible global lockdown and other good stuff like that. Stacy.
Yes, Max, we have been talking about, of course, the collapse of the markets and whether or not this is going to be like a Great Depression sort of era or a 1987 or a 2008, because history often rhymes. Of course, there are unique individuals and unique generations and unique societies encountering each wave of collapse all the way back to the South Sea bubble. So they're never completely the same, but the human nature and human instincts are often the same. Just like a virus is often generally the same. They become very deadly, and then usually they somehow are defeated. I want to look at some of the stories we've been covering, and I know everybody is probably stressed out there. We're stressed. Like, it's not nice to have a pandemic go unfolding around the world, and it's not nice to see markets down 10%, up 12%, down 7%. You know, this sort of turmoil is distressing. And the fact that we will have to shut down much of our economy for a month or 2 months is going to be a lot of hardship for a lot of people. So it is a serious situation. But in terms of Keiser Report and what we've been covering for the past 10 years, we've talked about the death of the dollar and the ultimate demise of the dollar. And it's not just targeting the United States. It's not just specific to them. It is about the fiat currency system, because we have been on a unique experiment since 1971 where we're on an all dollar standard. And we pointed out that on March 8th, Sunday, March 8th, the petrodollar era ended. That was Sunday, March 8th. That was the end of the petrodollar when Saudi Arabia flooded the world with oil and cut the price of a barrel of oil even by $10. This past Sunday, the 15th of March, I believe, was the actual end of the dollar when the Fed cut on Sunday night, just as they had, by the way, in March of 2008 during the financial crisis, in the beginning when Bear Stearns collapsed. Here we saw emergency rate cuts of 100 basis points down to zero. It took them down, interest rates down to 0%, essentially, and the markets tumbled.
The dollar is something we've been talking about for many years, and it's the only store of value at the moment. Everything is collapsing against the dollar. So how long will that last? Probably not a long time, because as we've seen during Bretton Woods or through the Plaza Accord of the 1980s, there's going to have to be a global coordinated sit-down to rearrange the global forex market, rearrange the global currency grid. And the dollar is not the thing they're going to have to match it against, because that runaway value in the dollar is what's causing this deflation, and it's what's causing this global depression part two. So they're going to have to rejigger the global currency grid. And as always, they always come back to gold. They're going to have to do a whole recalibration of the global currency markets against gold. So that's the only way out of this.
Gold has sold off magnificently, hugely. So is Bitcoin. Bitcoin was down 45% by one day last week. So there will be turmoil. It doesn't move smoothly. Look at the late 1800s to 1945. That was what you could call a very tumultuous period. But in terms of the dollar, yes, it is stronger right now. It is going up in many currencies. This is something that we've been tracking for over a decade here. And one thing people need to understand is the way one goes bust, the one way goes bankrupt, I think is fitting to use the Hemingway quote from The Sun Also Rises. And that is, how did you go bankrupt? Gradually and then suddenly. It always happens like that. Everything in nature reflects each other. How does the pandemic, how does the virus get introduced to a society, an economy like the United States? Gradually and then suddenly. That's how exponential things work. This is the same thing with debt. We went bust gradually and then suddenly. It happens like that. So I think we're going to see that.
We've got the central banks are the main players in the global economy. That's over the last 20, 25 years, that's been the migration of all activity, all global economic activity has been migrated to the central bank. So let's look at the Bank of Japan, probably the most important of the central banks, of any of the central banks. They announced a doubling of their purchase of ETFs or stocks. So my theory has been for a couple of years now that the whole markets are taken private. So if the Bank of Japan or the Federal Reserve Bank and other central banks are going to print trillions of fiat money, what are they doing with that money? They're not giving it to a way to build shelters for the homeless people that need it, or the people who have just lost their jobs and need relief, or hospitals. No, they're using it to buy back stocks. They're using it to take everything private, because this fits into neo-feudalism. This is neo-feudalism.
I would also posit that that could be the gradually and then suddenly paradigm of looking at things. It worked in 2000 to 2002. It worked in 2008 to 2010. It might work now, but eventually it seems to work over and over, and then suddenly it won't. But I also want to point out one other thing about gold and about what we can learn from the pandemic, because one thing we've seen across the world is panic shopping. And the fact is, we knew for over 2 months. We were already stocking supplies mid-January, third week of January. We knew this was coming. A lot of people chose to not notice it, or they weren't told on the news, or they trusted the government and they trusted Trump saying it's just a hoax or it's not going to happen and it'll be okay. And then what happened when they realized it, when they finally dawned on them that, in fact, all those people were right, that Chinese style or Italian style lockdown is coming. And there's been panic, absolute panic shopping. And you see empty shelves everywhere. You see empty shelves virtually on Amazon and other online goods shops. So I believe, and I could be wrong, so you should do your own research, but maybe the dollar will remain king for decades further into the future. But I believe that its end is near, and what will happen is, no matter what the dollar price is at the moment of gold, you will have the same exact situation happen in the gold market. You could have prepared for this decade, these years before the collapse, but you won't be able to get any gold at any price anywhere in America, in Europe, in Asia, in Latin America.
Gold is the toilet paper of the billionaire class. In moments of extremis and panic, they will panic buy gold and panic buy silver. There are already reports that shops are running out of gold bullion and silver bullion. As we've been saying for many years, the price of gold and silver is quoted in the paper market, the futures market. It doesn't quote the actual supply and demand on the ground market. And so we are not being told through the price signals that there is a huge demand already for gold and silver. And, what I'm thinking about in the stock market and the dollar is that I believe the dollar would have to come down, but it has to come down through a coordinated global effort. They have to shut everything down and recalibrate. That's the only way they can stop it, number one. Number two, in the stock market, with central banks just buying stocks in the open market, imagine this following scenario. Stock market's closed, and then a week later they say, okay, for example, everyone who owns Apple stock, we closed it at $220 a share. We're actually going to take it private, and we're going to send you a check for $100 a share. And that'll be it, that you'll be done. Apple's finished, it's no longer a public company, it's now owned completely by private equity. So they could just mark it down 50% in a giant leverage buyout from the central banks. Okay, that could be a scenario. Remember, there's no laws that apply to bankers or central bankers. They make it up as they go along, and they could do anything they want.
They can do anything they want. Hoover did the same. He did whatever the bankers wanted. They tried to protect the bankers. Ultimately, we had an FDR. Because we had Hoovervilles, that's where it came from, Hoovervilles. Hoover caused that crisis. We could see the same mass homelessness, hundreds and thousands, millions of Americans. But at the end of the day, all they have is paper. All they have is that fiat and the Federal Reserve protecting them. We could have a situation where Trump is forced, or whoever comes after him. I personally don't have much faith in the candidates on offer on the other side. But who knows? These are extraordinary times. We could have an extraordinary situation in November. Somebody might come along and be the FDR in this situation. They might get rid of the bankers. The bankers, at that time, we had the Pecora Commission. They were sent to jail. They were decapitalized. And we might have another situation unfold after this.
So it's a depression. And so the event of the past that most is similar to the current one would be the depression. And at that point, when you talk about Hemingway and his quote from for who the bell tolls.
That was The Sun Also Rises, written in 1926 about the lost generation.
Right, the lost generation. We've said on this show a couple of times that the Generation Z would be the last generation for a number of reasons. The economy is finished and the ecology is finished. It's a twin terminus, double eco-catastrophe.
That is one of the themes of The Sun Also Rises. Of course, they're traveling after World War I. The lost generation came to age in World War I. The Z generation has never not known war. We've been at war since they were born in the 1990s, late 1990s. They had the crash of 2000, 2001. They had the crash of 2008. They had this crash. And of course, the lost generation also had the Spanish flu, which is the closest to what we have now with this pandemic. So one of the themes is they actually rose to the occasion. They were considered kind of listless and just slackers and decadent, but they rose to the occasion, and that could be the situation now. We don't know. And in terms of, by the way, Great Depression, and you said Apple stock, it could be the opposite, because that's what the U.S. did at that time. They revalued gold. They doubled the value of gold, the paper value of gold. And what happened? That was to create inflation. So they might do the same. They might just say, hey, you own 5 shares of Apple at $200. We're going to give you not $1,000, but we're going to give you $2,000 for that.
And with gold, they confiscated it first.
They'll confiscate your shares of Apple and say, we own it now. You don't own it, but here's $2,000. Go spend it.
That's the possibility, I suppose.
Well, these are extraordinary times, so all one can do is do extraordinary things. By the way, I might add, I hope you notice my props in the background, because this is giving me hope. The pink flamingo, and what is it? Oh, it's a cactus. So, hoping and dreaming that one day I'll be able to see the sun again.
Yes, the pink flamingo is the universal symbol of hope and sunshine. Everyone knows that. Cogitate on this pink flamingo moment, and don't forget your keto cheesecake. This is what's going to get you through the crisis. Make it in an Instapot. Takes 28 minutes. Going to take a break, and when we come back, much more coming your way. Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to Craig Hemke of TF Metals Report. Craig, welcome back.
Hi, Max. Welcome to a crazy 2020.
2020 is turning out to be chock full of goodies for stock junkies and precious metal watchers and news and politics observers. Let's get into it. So first of all, apparently toilet paper is the new store of value. People are valuing toilet paper much higher on a per gram basis than gold, platinum, rhodium, or any other precious metal. How did toilet paper become the universal store of value, Craig?
I saw something on Twitter yesterday that showed an empty rack of toilet paper on one side of the aisle and a full rack of vitamins and pro-immune system products on the other. Boggles the mind. But yeah, toilet paper is certainly more valuable than Comex paper at this point. We're all getting, it's really interesting, Max. I think it's an education for anyone that follows these markets that there really is a disconnect that has begun between the physical price and physical availability versus the price and the availability of these derivatives that are traded. And somehow, even though they have no connection with price, even though they're not backed up with any physical metal or no delivery ever takes place, nonetheless, that derivative trading somehow is allowed to set the price for physical trading. It'll be interesting to see where we go from here, because the premiums that dealers are charging to acquire physical metal for you and ship it out to you are just through the roof.
I'm so old, I remember the Greenspan put. I was working on Wall Street in the 1980s. After the crash of 87, they introduced what became known as the Greenspan put. That was replaced by the Bernanke put, replaced by the Janet Yellen put, and now we have the Jerome Powell put. This is the idea that no crash is too great that the central bank can't bail everybody out by cheapening money. However, Jerome Powell, the current Fed chairman, cut rates by a full point, 100 basis points, a shockingly big cut in rates. And the response this time was a resounding thud. Markets crashed on that news. Does this mean that this idea that the central bank can make all problems go away? Is this finished now, the era of the central bank put, Greg?
Reminds me of 2008 and 9. You'll recall how coming out of the financial crisis, all of the cash that the central banks had printed, all the extraordinary measures they took, didn't seem to have an immediate impact during the crisis. But man, oh man, once there was those proverbial green shoots that were shooting up in 2009, I mean, there was no looking back after that, especially even in the precious metals. The same thing may happen here. We get this virus under control, whatever it is. Trump just said it may be summer before they feel like things are under control. We get back to normal. But whenever that happens, it's not like the infrastructure's been bombed out. The plants are all just sitting idle. And so we may very well see some huge surge in economic activity when this is finally all behind us. And all of this extraordinary measures these central banks are taking, all of this cash may just go flying back into all these financial assets. So I don't know. We didn't get much of an impact from what the Fed did this past weekend, at least not immediate impact. But man, the long term impact of what they've done may be felt in the months to come. And my friend, you go back to 2009, 2010, when you were talking about crashing JP Morgan by buying physical silver. We may be on the verge of that now, finally, because again, people are figuring out that there's, a price that's determined by trading phony baloney, plastic silver, if you will, these paper contracts. And then there's the real thing. And we may be getting to a point in this kind of global crisis where people will finally demand the real thing, not allow, to be sold this bill of goods, unallocated accounts, futures contracts, and all this other garbage that isn't precious metal. They may demand the real thing, and that might be a positive change that comes out of this.
No, Wayne, that's a good point. There is a delay in the impact that all this cash has, and it is a tremendous amount of cash. It's many trillions of dollars are being thrown at the market, and then another 700 billion in what I guess can be termed quantitative easing. So quantitative easing is back in the mix, and that's a lot of cash floating around the system in the hands of unaccountable bankers who like to hoard that cash and put it to use in stock buybacks, mergers and acquisitions, and basically consolidating their monopolistic positions across every sector in America. I would imagine there'll be an enormous consolidation in the airline industry. We'll probably see several airlines be taken over. We'll see some more banks being taken over. We'll see at the end of this, several private equity firms owning yet more of the operating capacity of the American industry, held by fewer and fewer hands, which is terrible for the hoi polloi. It's terrible for the guy in the street. Speaking about the guy in the street, we're talking about $1,000 per month check will be sent to every American for the duration of the coronavirus lockdown, according to some rumors that are swirling. What do you think about this, Craig?
Every part of me has never been a big fan of this idea, of helicopter money and modern monetary theory, all these things that we've kicked around forever as being, terribly devaluing to the currency. But, in this moment, why the heck not? In fact, it'd be terribly unfair if they didn't do something like that. What I read a couple days ago that the hole that the central banks, maybe even just the Fed, are going to have to fill in could be $12 trillion. It might be twice that. But out of $12 trillion, for God's sake, if they can't give, let's say, $4,000 to 50 million people who W-2 less than $50,000 a year and have no savings, if my math is right, $4,000 to 50 million people is only $200 billion. They're talking about 12 trillion. That's 60 times as much, man. If they can't carve off 1/59th to find some relief for people that work in bars and restaurants and now all of a sudden can't make their rent, then for God's sake, maybe it is time to grab the pitchforks and storm Washington. I don't know. This is such an extraordinary time, Max. People ask me, they say, well, where do you think, support lies? And where do you think the markets will turn? And I say, man, I don't have any charts that go back to 1918 and 1919, the last time the world dealt with something like this. I can't look at the commitment of traders reports, and say, well, when this happened, then we finally reached a low. Even these optimistic forecasts, if you will, that maybe we get back to normal by May or June, who knows if that's going to be right? And so at this time, what I've been telling people on my side, it's just, you got to be prudent. You got to be prepared to shelter in place for a while. And if you don't have some physical gold and silver, there's never a bad time to get your hands on some, because if this all plays out, and if suddenly this banker scheme for how the metals are priced, which is now becoming apparent to more and more people by the day, that type of, I don't know, I guess we'll call it a reset, may be an outcome. I mean, be fine with me if it did.
You make a good point there about this universal basic income equivalent, the helicopter money, the $1,000 a month given to Americans, because the American consumer has heroically and gallantly put themselves into massive arrears, accumulating enormous debt by shopping themselves to near extinction to keep the billionaires rich. But if they all die en masse, whether it's coronavirus or the bankruptcy and related problems associated with that, then the billionaires would have to, for the first time in 50 years, get real jobs, right? They'd have to actually do stuff instead of just being rentier vampires sucking the cream off the top of the economy. So they've got to keep the suckers alive. I remember working on Wall Street, the saying was always, shear, never slaughter. This meant to say that when you have a book of customers, you just shear them periodically, month after month, but you never slaughter them because you don't want to kill the golden goose, as it were. And that's the way the bankers have treated America for decades. And they're at risk of killing or slaughtering the golden goose of the maniacal American consumer. Speaking of precious metal and price discovery, silver has gotten down to like 11-year lows. It's almost I think it did touch single digits. What is good? I'm choking on the words that come out of my mouth. I'm in such shock, Craig. What happened to silver?
Max, I woke up Monday morning and gasped. I mean, and then laughed, actually, when I saw it trading at 12. Look, I've been trying to tell anybody that would listen, gold and silver are your safe havens. I mean, for millennia, they are money, they are protection against, this type of thing. What is not a safe haven are the gold and silver futures contracts. I mean, they're being just liquidated by hedge funds and other large institutions and the like that have margin calls from other parts of their portfolio. And so if it has a bid, it gets sold. And so we've seen the price of these derivatives, that's made by the exchange of these derivatives on the COMEX fall to $12, but you can't find physical silver for $12. Most of the dealers are sold out. If you can find a dealer to sell you some, they're going to charge a premium of $4 to $6, maybe even $8 above that paper price, because they know how the heck are they going to manage their own risk of trying to acquire physical to send to you once you buy it. So that's what I mean. There's this disconnect happening now, and it's very educational for a lot of folks that I guess never really taken the time to understand it, that there is a price that's determined by the trading of what are basically baseball cards, and that's allowed to determine the physical transaction cost. And I think people now are seeing the real disconnect. It's very educational. And if we finally get to the point, and then Max, this gets back to the crash JP Morgan campaign, we need people around the world to say, no, I'm not playing your game anymore, Mr. Banker. I'm not buying the ETF. I'm not holding my metal in an unallocated account in Switzerland, all that stuff. I want the real thing right now, and call these people to the carpet. And when that happens, finally, and it may be about to happen finally, that's when the system will finally be forced to adjust and shift to an actual pricing scheme where I have cash, you have metal, and we exchange the two at an agreed upon price. None of this just, flipping of derivative contracts instead.
You mentioned the crash JP Morgan buy silver campaign. At the time, and this goes back to 2008, 2009, somebody at a mint actually produced some silver rounds with that logo on it. And I think last time I checked on eBay, they're trading at a 300 to 400% premium. So they actually held their value over this decade. It's interesting over there at the COMEX, we've complained for years and years that it's over leveraged, that they have sold forward hundreds of thousands, if not millions of tons of silver that not only don't exist, but are not even recorded on anybody's ledger as being part of the COMEX exchange itself. It's complete phantom selling. And yet this is what is being criticized by the Wall Street critiques, are saying, look, there's too much leverage in the system. No one seemed to care that the silver market's been over leveraged by 100 to 1 for the last 10 years. But what if there was a run on the COMEX finally, Craig Hemke, is this what you're talking about? We've got about 30 seconds.
I'm not sure about a run on the COMEX specifically. I'm just talking about the whole system from London to Switzerland to Dubai, every place else that exists on this kind of just-in-time delivery of physical metal that is that is priced off of these funny baloney contracts. So if people just lose confidence in that system, lose confidence that they can get their metal in a timely manner, then maybe that system finally begins to fall apart. That's what we're hoping for, Max.
You heard it here first. Craig Hemke of TF Metals Report has said categorically that silver is worth more than toilet paper. And that's going to do it for this edition of the Keiser Report. With me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Craig Hemke of the TF Metal Reports. If you want to catch us on Twitter, it's Keiser Report. Until next time, bye, y'all.